Welcome back to Trading 360. I'm Nicole Petalides. The Dow is up 515 points right now, friends. All right, so it's time for the big three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts. So welcome to you both. Thank you for being here. Mike Shore of Prosper Trading Academy is also with us. Mike, some of your thoughts, big picture on the markets.
Yeah, I mean, we've obviously had a few scares in here, which, until proven wrong, I think are still buying opportunities. I mean, this market continues to be resilient with pockets of volatility as we've seen over the last few days. But until we actually take out some actual support, I think that you have to stick with the bullish side. And then, with the PC numbers and everything coming out in line today, that gave a little bit of a boost. And if Congress can get their act together, then then I think that we have even more upside. And then we'll see what happens once we get the transition from the current administration to the next one.
Right, understood. So a good big picture there. First up that you're discussing here today is AFRM. Tell us a little bit about that.
Yeah, so AFRM has been in a really nice bullish pattern. Obviously, with the last at least 2 days, we've seen some pullback. I thought we were going to get it maybe this morning, a little bit of a pullback down to 59.20. We didn't quite get down there, but that was the level that I was looking to get in there, because this has been a stock that's been pretty hard to get your hands on.
Right, understood. Okay, so let's see what Rick says about the chart. What do you think about the chart today?
Well, a nice rally to be sure recently. And when we look at our kind of general landscape here, we can see that right here, August 5th, such an important day for so many stocks. It marked a significant low for just many products during troubles with the Japanese stock market. You can see, though, that gave us our blue trend line, kind of helps us form this channel that gave us the general trajectory of the price for quite a while here. But we had this upward sloping trend line in yellow, this kind of lighter yellow color, and then we can see we topped out around 73 or so. Then we had a big drop off. We had a bearish engulfing candle 2 days ago. Not really much downside follow through. Nonetheless, we're kind of struggling here. We are making our way back above our green horizontal line there and above our yellow 21-day EMA. So maybe some positive signs here. Maybe we're regaining some footing, even as RSI continues to be near the 50 midline here. We're crossing kind of back above that key area. But look, you can see that our green trend line has been broken here. So we'll have to reestablish that. We'll have to kind of claw our way back for momentum to recover. When we also add in volume profile, we can see right here, 70-50 lines up pretty well with our +2 standard deviation channel, our volume node, and our extreme price level way we can tell the standard deviation channel here. So you can see we kind of bounced off this area as well. Here's another key area marking some highs and lows near our +1 channel here. So those would be the areas to watch. Around 57 to 59 on the downside here, around 73 to the upside would be, what the bulls would want to see, Nicole.
All right, thank you for that, Rick Ducat. So what do you think about the chart? I mean, where do you think this really is headed when you do an example trade here, Mike?
So I'm not necessarily looking for us to break new highs. Actually, with that pullback, we actually have some room where we don't need to ask the market to go higher than it's even been. So I'm going out to the regular January 65.70. Rick was talking about that 73 area. I see the same thing, but we don't have to get to 73 there. So if we did get that pullback to 59.20, I was looking at that 65.70 call spread. You'd be able to get that for about $1.35, which would give you a risk to reward of 2.7 to 1.
Right, understood. All right, next up, the darling of Amazon. I was looking back at a report I did in 2016. It said Amazon $1,000 or something. It's just amazing, the runs and the splits that we've seen for Amazon, and still a darling here on Wall Street in the Mag 7. Some of your thoughts here on where this could be headed at 224 today.
Yeah, so almost the same idea. When we get these pullbacks in a generally bullish market, you kind of get out your Santa's wish list of stocks that you had a hard time getting a hold of, and Amazon's been one of those. And so I was just looking for a pullback to the 20-day moving average. and that would be 217.17, which we almost got to that this morning, but it didn't quite get there. But I still like it. I like everything about it. We got, hopefully their sales throughout the holidays are great. And then, of course, you have AWS, which is, you could argue even a bigger driver of what Amazon does. So I'm only going out to January 3rd here. So a quicker trade, 225, 230 call spread. If you can buy that for $1.50, then, and that's where it should line up. And the implied volatilities are expecting a 1 standard deviation move from there up to around 230. So if we can get that for $1.50, that means that we can make $3.50 and just pay $1. So that's 2.33 to 1 reward to risk. A lot of vertical spreads today.
Okay. All right. Yeah, no. I totally get it. That's good. That's good. Let's see what Rick Ducat has to say about the technicals and looking at the charts. Rick.
Right, Mike mentioned the 20-day, I believe it was simple moving average here, and I have something similar. I have the 21-day exponential moving average. So we did actually touch the 21-day EMA. I'm not, they're not, one is not better or worse than the other. They just kind of measure different things. That's why it can be valuable to maybe consider having a few different ones on your chart, kind of see where things line up. Nevertheless, that's about where we opened up today. That's about where we held on. So now we can see that we are kind of within our channel type shape here, our white channel, starting with, once again, the area near August 5th, but you can see that we kind of topped out near 235 and we broke above that channel. So we also kind of drifted beyond our very steep purple trend line, our short-term trend line there. So now we're kind of dropping off even as we found support. RSI was exhibiting some bearish divergence. Once again, price made new closing highs. RSI trended downward. Light green trend line is broken, still in bullish territory, still above our longer-term, green trend line there. So when we look at the key volume areas, we can see that right around here, up at these higher levels, there were a lot of trading around 230. We are making our way back above our +1 standard deviation channel, 1 standard deviation above our blue linear regression line, which is right here, which also lines up with our old trend line. So that could be another noteworthy area, and then bigger volume node here near 200. So when we tie it all together, we can kind of see our zoomed in look here. Yeah, this is kind of the area to beat, 230, and then our +2 channel near 240 or so. To the downside, look to hold that 21-day EMA near about 220. Then look here. Linear regression line, 63-day EMA, old trend line, all coming together around like 206 or so.
Right, understood. Okay, I mean, look at what an incredible run it really has, right? I mean, it's up 50%, hits this high of 233. So, Mike, what's your trade? What are you going to do with this one?
Well, this one I'm going out to January 3rd, 225, 230 for $1.50. If we get down to 217.70, which is where I want my entry to be, and that's what gives you the reward to risk of 2.33 to 1.
Okay, next up, Upstart in focus. What's Upstart been doing lately? Because I think this one was great for a while and then not. Let me see. Let me double check this chart. Okay, it has had a nice run up. It went up to almost $90.
Yeah. Yeah, so, earnings went really well, and then we've kind of really gone sideways since then. And now we finally, over the last few days, we've got the pullback with the rest of the market. Another one that has still a lot of upside to it. And this one you would have been able to get into this morning, and it's taken off from there. But I was looking at that 50-day moving average at $65, give or take a couple pennies here or there. $65. And so this one I'm going out to January 10th, 75.80 call spread. So we don't have to go and make new highs for this to work out for us. If we can buy that for $1.10, then we can make $3.90 on that. And so that's 3.55 to 1. So that one I like from a technical. We get right back up into that kind of congestion area where we were going sideways. And, if the market cooperates, I think that has some really nice upside to it.
Okay. I think about Upstart, and I just pull in a long chart. Like I was looking at 3 years. I mean, this was well over $160 in the 3-year chart. Tried to give it a go last July and then sort of pulled back. it's been choppy over the long term, but looks good in the last year. Some of your thoughts, Rick, on the chart.
Well, exactly like Mike said, big, gap up on earnings, and then kind of a very clear range that we've carved out here between our lows around here and our highs near here. Kind of a bit of an upside test. We topped out near 89 or so, but quickly came back down to earth. And Mike had mentioned 65 being the level of that 50-day simple moving average. Once again, I don't specifically have that one. I have 2163, 252-day EMAs. They're all important, though. I look at all of them. I can't fit everything on the chart all at once. But 65 is the same level as our lows. So we have a significant low, and right about there would be our 50-day simple moving average. So right around 65 is a point that's worth watching, especially too because just below it we have our orange 63-day and our trend line near about 63 or so. So kind of look for these confluences, look where a bunch of things line up at the same time with each other. RSI not doing great from a bullish perspective, actually having a bit of a breakdown below that 50 midline. We can see that things were kind of waning here for a while. Once again, we did not actually see bearish divergence because we didn't make a higher close from here to here. From this point, from here to here, we did, though. So that was kind of the warning sign there. That was maybe when the cracks were perhaps starting to show. So when we look at volume profile, nothing really stands out very well. Sometimes it's really helpful. You can see very clear levels. In this case, nothing really till down here and here. Those are the standout points, and they're so far away, not really that useful anymore. But we can look at our standard deviation channels. +1 channel, +2 channel. Just about where we topped out recently was our +2 channel. That could be a resistance point today in our +1 channel. So 72 is a level to watch. Then our range high near 81, and then our +2 channel and our old highs near 89. To the downside, this gap. The gap is obviously the key level, so 65 to like 57 or so. Then our linear regression line, our idea of fair value, 55.88, so around 56.
Yeah, understood. Okay, great charts today, Rick, as always. Thank you for that. Do you think we'll see the Santa Claus rally? I don't know, either now, look, we're starting to turn things around after what was such a volatile week. We're up 500 points on the Dow. It's 571. What do you see, Mike, in the next, 6 to 10 days?
Well, I think a lot of it has to depend on Congress. I mean, there's nothing good about the government shutting down, on people's personal levels. And then also, the market doesn't like uncertainty. They can deal with good news, they can deal with bad news, however they see fit. But, it's the uncertainty that makes it a little bit rough. So if typically these things go down to the last minute, everybody's, clutching their pearls and everything like that and worried. Somehow, usually something gets worked out. This could be a little bit different because, we have a lame duck president here and a president-elect who seems to be dictating what's going to be going forward. And, he clearly is not in favor of passing maybe even anything unless he gets everything that he wants. So, we have until midnight tonight. So, ask me a little bit more on Monday morning. If things go through and we get some sort of extension, then I think that we do get that rally. If not, look out below.
And I may have stepped on your final thought on Upstart, which had that high of almost $89.
Right. So, this is the January 10th 75.80 call spread for $1.10. It was there this morning. We've rallied significantly since then, so it's not there right now. But that is a really nice reward to risk ratio that lines up with the expected move from implied volatility of 3.55 to 1.
Okay. Great to see you both. Mike Shore of Prosper Trading Academy and Rick Ducat. Thank you both so much for being here for the Big Three today.